We are here at the TC conference in Pennsylvania, and even though in the name it's a crypto conference, it turned out to be quite a Bitcoin maximalist event. And I'm sitting next to Tone Vays, whom I have been trying to get on interview for over a year now. I'm happy to finally see him in person and interview him, so thank you very much, Tone.
Hey, thanks, Vlad. It's a pleasure.
So I saw your presentation today, and you spoke about the value proposition of Bitcoin and why it stands apart from all the other altcoins. And you explained in the most popular cases why the experiments which try to replicate or add an extra feature to Bitcoin are doomed to fail. And I was thinking that this is not what I expected from the best known trader in the Bitcoin space. Are you trying to transition to something else?
No, I am known as like a trader in the space. I'm also made fun of as a trader in the space that doesn't trade. But there's a reason why I don't trade. The reason I don't trade is because I didn't join this space as a trader. I joined this space basically as a Bitcoin evangelist. I joined the space to explain what Bitcoin is, to try and get Bitcoin adopted, to try to educate people about Bitcoin, the technology, and Bitcoin, the financial revolution. But unlike people like Roger Ver and some of the others, I didn't get into Bitcoin early enough to have a bunch of Bitcoin, to not to have to worry about money ever again. So unfortunately, I still have to make a little bit of a living while I do my Bitcoin evangelism, because as you know, conferences don't exactly pay. My YouTube channel costs me more money to maintain than it brings in. My conference speaking and traveling costs me more money than it brings in. So I gotta finance that somehow, and I'm leveraging my skills as a trader in order to make enough money to keep doing what I'm doing. Otherwise, I might as well go back to Wall Street and make hundreds of thousands of dollars, which is what I used to do. So I just, I use my skill set as a trader. I talk about trading, that's what everybody wants to listen to. I teach people how to be traders. I teach my workshops. And lately I also started organizing conferences, even though that's also a very difficult field. There's a big blockchain week every week somewhere in the world. It's probably more blockchain weeks than 52 around the world. And look, you gotta make a living somehow, and it's impossible to travel, speak publicly, and trade. But it is possible to travel, educate people how to trade, and use that revenue in order to do what I really wanted to do from the start, which is to evangelize Bitcoin, the right Bitcoin, because Roger Ver failed us.
Right. So sometimes I watch your videos, I see them on Twitter, and I go on YouTube to watch them, because I know that last year when everybody was calling 6,500 the bottom, you said no, it's going down from here, and it went to 3,500.
Lower than that, 3,150, but yes.
3,150, okay.
Not as low as I would have liked for an ultimate bottom, but I'm still very concerned about the price.
In which sense?
I don't like the way Bitcoin started rising early this year, and I really didn't like the way it topped at 14,000, and we've now lost almost 50% of its value. It topped at 1380 or thereabouts, and it bottomed last week at around 7,700 or thereabout. I'm still a little uncomfortable with 7,700 as the low for this downturn, and I still give it a greater than a 50% chance that we are going to go lower than 7,700. Okay. How far low is a different discussion.
FYI, not financial advice. Nothing from this interview.
That is also my opinion, and just take it as that. I teach people how to trade so they don't have to rely on my opinion. They make their own trading decisions, which is what I want people to do if they're going to speculate in the dangerous world of trading.
Sometimes I wonder if trading is, or predicting trades with technical analysis is the correct metric, because you have all these sudden events in Bitcoin, and I guess it happens in all assets which have a low liquidity. And I suppose until we get to that point where mainstream adoption really happens and maybe the fact that a whale decides to sell will not influence the market as much. Well, I forgot how I started my sentence.
Oh, I know.
Well, what I'm trying to say is that you think that TA is relevant at this point?
I think TA is always relevant, but it's also, the question isn't whether TA is relevant. The question is TA relevant for you? So if you are a big hedge fund, I don't know if anyone, I'm sure a lot of your viewers, like everyone else around the world, watches the show Billions. If not, they should. If you're a big hedge fund, if you're JP Morgan, if you're Goldman Sachs, they're not exactly hedge funds. But if you are a big hedge fund, if you're BlackRock, if you're Bridgewater, if you're, if you're a big hedge fund, you're not doing TA. If you're a big hedge fund, you have the resources to do real fundamental analysis. Hire a person whose job it is 8 hours a day to research a single company until he gives you a report on that company. An average person that A, may have a job, or B, may not even have a job. His job is a full-time trader. He still doesn't have the resources to do real fundamental analysis. And therefore, it's not about whether TA is a good choice. It becomes the only choice for a retail trader, whether full-time or part-time, until you grow big enough to hire interns that are qualified to do research on an asset you may or may not want to invest in. News events occur in every single asset. So again, unless you have the resources to investigate ahead of the news event is supposed to be unpredictable unless you have insider information or the resources to basically have someone on the front lines to give you the news before the news breaks the news. So TA becomes the only choice because at the end of the day, everyone around the world puts their money where their mouth is, and that creates certain patterns and certain trends. And if you are confident in your analysis of TA, you can make, you don't have to be right with TA. TA just has to give you structure, to be disciplined, to enter trades. You don't have to profit from every trade, nobody does. So I find TA very useful, especially for a retail investor, because that is his only real way to confidently trade the market. And if you choose an asset like Bitcoin, or even worse, a shitcoin, you have to understand that the market you're playing in is very illiquid. And a guy with $10 million can move the price. A guy with 10 million can move the price of Bitcoin. Imagine what that guy can do for an altcoin. If you are scared that a big whale can easily move the price, then you're trading in the wrong market, or you shouldn't be trading. Everyone always claims that's manipulation. Manipulation is just an asset that moved opposite of where you were expecting it to move, and it's always manipulation. So if you're complaining about manipulation, go trade something else or don't trade. To me, a manipulated asset is diamonds. And the reason why they're manipulated is because unlike gold or silver or even oil, I have no ability to participate in its price discovery. I have the ability to participate in Bitcoin's price discovery, oil's price discovery. All I need is $10,000, and I can participate in price discovery of oil. But there's no matter how much money I have, I can't participate in the price discovery of a diamond. I just gotta pay whatever the beers tells me, right, if I wanna buy a ring. So that's a manipulated market, okay? And as long as the playing field is even, like my view is this: if you have a poker table and 9 guys are playing poker, and they all have about $1,000 in chips, and one guy comes to sit down and he's coming in with $50,000 in chips at that table, I'm sure the other people are going to be a little upset. But unless there are some kind of rules that are preventing him from doing that, he has the right to sit at that table with $50,000 worth of chips when everyone else has approximately $1. And he can push that table around if he knows what he's doing. If he doesn't know what he's doing, he's going to lose that money. But if he knows what he's doing, he's gonna push that table around. And I'm okay with that. What I'm not okay with is if the casino is giving one of the players at that table an insider advantage on what the other people are holding. So I like regulated markets, and I want that to be an even playing field. Now, you consider a table that doesn't allow a big player to come in with money, but that's not exactly capitalism. So I don't have a problem with a big player pushing the price around, as long as he's playing by the same rules as me and he doesn't have an insider advantage.
Right. Which is hard to prove in the case of Bitcoin, as you have
Very
all these
hard to
whales.
It's
Even
hard.
if it was regulated, it's still very hard to control.
Agreed. The regulation is not always perfect, but it's there to give you an even playing field. Now, you can complain about the regulation, and that's fine. You can criticize the regulation, and you can try to make better regulation, but the regulation is there to try to give you an even playing field. But in the crypto casino, you don't know what kind of information the exchange is giving certain players.
Speaking of regulation, I know that you come from the United States, and we have seen in the past week some decisions by the IRS, which decided to implement a new system of taxation, which includes airdrops, and some people have mocked the whole concept by saying they can simply airdrop tokens onto the congressmen and make them liable to pay millions in taxes by pumping the tokens. My question for you is, would you participate in some kind of roundtable debate, or I'm not sure how I should call it, but would you collaborate with your government to properly inform them what Bitcoin is and how it should be regulated?
I would. I don't know if I want to talk about how it should be regulated, but I would love to inform the government of what Bitcoin is and how it works. I think they understand it, but at the same time, I question it because of the way they foresee Ethereum. And I think the biggest thing that I would want to educate the government, the US government on, is the difference between Bitcoin and Ethereum, because they're not even close to being similar as my presentation described earlier today. So I think that's the biggest challenge. The tax law on Bitcoin is very bad. Not that I'm a tax expert, so I don't see why they would listen to me. But in that case of the airdrops, I haven't fully dissected that document, unfortunately. I haven't had a chance to fully read it. But it says that, but I still think it's questionable that it's not when the airdrop happened. I think it's also possible when you split your coins. So if you are holding your own private key and you never actually split the fork or the airdrop, if you never split that airdrop, I don't understand how they can possibly expect taxes from it. Now, if you're holding it at an exchange, it's up to the exchange to decide whether they're going to split it or not, and then you would owe taxes. I think that if it's the case where once you split the coins and the new airdrop coins hit the blockchain, if you owe the taxes at that point, your only real concern is, let's say you go on some mission to Antarctica and you don't have the internet, and the exchange that's holding your coins decides to split them, and by giving you the option on when to sell them, and you have no idea they were split, and then you got a major tax problem. So the taxes on Bitcoin are terrible. The government needs to understand that Bitcoin is used as currency for transactions. And just like they treat all currency, foreign currency, for example, I am here in Romania, I go to Europe quite often. If I go to the United States and I come back with a few hundred euros, for example, they can sit in my house for forever. And if they appreciate in value against the dollars, I don't owe any taxes on that because there is a cushion there. Now, if I'm a trader and I'm a currency trader and I trade currency, yeah, I owe taxes on currency appreciation. But in the law, there is a difference between currency for commerce and currency for speculation. And the US tax authorities, IRS, need to give Bitcoin a bit of a cushion, maybe even more so than the euro or the pound. Give it maybe $1,000 worth of cushion to allow people to use up to $1,000 worth of Bitcoin in commerce without worrying about whether that $3 had gained 10 cents or not before being, in one way or another, criminally liable.
I think this issue is very underrated. It needs to be talked much more because the United States usually serves as a legislative example for the rest of the world. And when you have other democratic countries, for example, within the European Union, they're going to see the regulation from the United States and debate it maybe in the European Parliament and see how they can implement it in the member states. And it's terrible because you are the first ones to have Bit license in 2013.
That was bad. That drove a lot of companies out of New York.
Yeah, and it was the first framework in the
It
world.
was a terrible framework. These frameworks are usually bad. What I've said for a long time, hold your own keys, buy some Bitcoin, stash it away, and come back in 10 years when they actually figure out what the hell it is and then deal with it.
Yeah, I think that's the best approach, really. Just hodl for 10 years and forget about it. Don't advocate, don't walk around with Bitcoin merchandise because
It's too late for some of us.
it's too late for some of us, but you know.
I think I have to jump on a panel.
Okay, so thank you very much, Tone.
Thank you.
I'm happy we had this discussion.
Excellent. Thank you so much, and hope you guys enjoyed the little chat.